Are you looking to double your money in just 5 years? In this video, I break down the 5 best S&P 500 index funds, perfect for anyone aiming to grow wealth with a simple, budget-friendly strategy. We'll dive into how these funds compare in fees, returns, and risk so you can make a confident choice for your portfolio. Plus, I'll show you how the Warren Buffett buy and hold strategy combined with these funds could be the key to maximizing your long-term gains. The first fund is the SPDR S&P 500 ETF Trust, SPY. This is the largest S&P 500 index fund with around $595 billion in assets. Although it's not the lowest cost option, its popularity makes it a go-to choice for many investors. However, most investors don't realize the S&P 500 is capitalization weighted, which can add some risk. In SPY, as with other S&P 500 index funds, a small group of large-cap stocks carries a significant portion of the fund's overall weight, which can impact performance if these stocks experience volatility. The challenge with a cap-weighted fund like SPY is that if the largest stocks in the index decline together, it can have an outsized impact on the fund's performance. To mitigate this, I suggest dividing your S&P 500 exposure between SPY and an equal-weighted S&P 500 fund, such as the Invesco Equal-Weighted S&P 500 Fund with ticker symbol VADDX. This approach balances the influence of large-cap stocks and provides more diversified exposure. SPY has a 0.095% expense ratio and a year-to-date return of 22.7%. Next is Vanguard S&P 500 ETF, VOO. Launched in 2010, this fund is designed to closely mirror the returns of its benchmark. It provides a solid proxy for U.S. stock performance. VOO is known for its low cost, which makes this Vanguard fund a popular choice among investors. I personally prefer VOO over SPY given its lower expense ratio of just 0.03%, 2/3 less than SPY's, and a 5-year tracking error also 2/3 lower at 0.02%. VOO offers a year-to-date return of 22.8%. iShares Core S&P 500 ETF, IVV. This is another strong choice for S&P 500 exposure. This ETF offers a low expense ratio similar to VOO at just 0.03%. Compared to SPY and VOO, IVV has a slight advantage with an even lower 5-year tracking error of 0.01%, making it my top pick among the three. With a year-to-date return of 22.8%, IVV provides reliable performance at minimal cost. The next fund is the Fidelity 500 Index Fund, FXAIX. This Fidelity Index Fund offers S&P 500 exposure through a mutual fund structure. While mutual funds are typically associated with higher fees due to active management, FXAIX operates as a low-cost index fund with an impressively low expense ratio of just 0.015%, lower than most S&P 500 ETFs. This translates to only $1.50 in fees for every $10,000 you have invested, which has enhanced its 10-year return compared to funds like SPY. If low fees are key to your strategy, the Fidelity 500 Index Fund stands out as one of the most affordable options among the S&P 500 index funds. To demonstrate the significant impact that lower fees can have on long-term investment growth, consider this. Investing $100,000 over a 10-year period in the cheaper FXAIX could yield approximately $2,900 in additional returns compared to higher cost options, assuming annual compounding at the 10-year rate. And finally, Schwab S&P 500 Index Fund, SWPPX. Similar to Fidelity's S&P mutual funds, Schwab's version boasts a lower expense ratio, contributing to its strong long-term performance. Both funds have a turnover rate of 2%, indicating that only a small percentage of the portfolio's holdings are replaced each year. This low turnover is typical for S&P 500 funds, aligning closely with the underlying index. For long-term investors, two of the leading S&P 500 index mutual funds are SWPPX and FXAIX, both of which feature lower expense ratios than IVV. While SWPPX has a slightly higher tracking error compared to FXAIX, the Fidelity 500 Index Fund holds a distinct advantage overall. However, with a year-to-date return of 22.9% and an expense ratio of 0.02%, the Schwab S&P 500 Index Fund provides reliable performance at minimal cost. So here is a summary comparison of my top 5 S&P 500 index funds and how they stack up against the index. These funds offer slight variations in returns and costs, but all provide broad, low-cost exposure to the S&P 500. If you like this video, you'll also like this one on the top 5 growth ETFs for explosive returns. I want to hear from you, so share your thoughts in the comments. If you enjoyed this video and want to see more investing tips, make sure to hit the like button, subscribe, and turn on notification so you don't miss my next video. Thanks for watching, and as always, stay financially savvy. See you in the next video.